Well, let's get things started. Good morning or good afternoon if you're perhaps elsewhere on the globe. I am Paul Cardarelli from JETNET here at the JETNET headquarters in Utica, New York, and this is a webinar to discuss business aviation. Our theme today is Turbulence Ahead with a question mark, navigating tariffs, trade, and economic uncertainty in business aviation. I'm joined today by three very esteemed friends and colleagues from the industry who are thought leaders, I'll call them, in the industry, and they are as follows. We have Kevin Michaels from AeroDynamic Advisory. If you're not familiar with Kevin, he's a globally respected aerospace consultant with some 39 years of experience and deep expertise in OEM strategy and global supply chain. Kevin is an award-winning author as well of a book called AeroDynamic and is currently co-authoring Time Machines, A History of Business Aviation, which will be published by the AIAA in 2025. We're also joined today by Richard Coe, part of the JETNET family now, but Richard is managing director and co-founder of WINGX, which provides market intelligence on activity and underlying economics of business aviation aircraft. WINGX is flight and fleet tracking dashboards, providing critical market intelligence and insights to many of the industry's leading suppliers and operators. And last but by no means least, my friend and colleague, Rolland Vincent. If you don't know Rolland in the industry, you probably should, particularly for business aviation. He has his own consultancy, Rolland Vincent Associates, out of Plano, Texas, and he's also our partner here under JETNET IQ. Rolly's a longtime aviation strategist and market forecaster. He has some 40 years in the industry. Rolly's creator of JETNET IQ, as I mentioned, and a trusted advisor to OEMs, operators, policy bodies as well. His expertise spans market intelligence, customer sentiment, and business aircraft demand and analysis. So those are our panel today. I'm glad to have you all with us. Many of you, myself included, Rolly and Richard, we just returned from Geneva, the eBay show. It was a good show, but for sure we talked to people, and there is an underlying sentiment of concern out there in the world. So I have a couple of quick opening comments here. So we're seeing the business aircraft markets now, new and pre-owned, and they are on a positive pace year over year, and that's certainly good news. But for sure, there's underlying uncertainty among aircraft owners and operators, and those of us who facilitate trade and commerce in the industry. The uncertainty stems from supply chain issues that continue to challenge OEMs. I'm not going to say beleaguer anymore. I think that was a term used a couple of years ago, but it does continue to challenge them. There are ongoing geopolitical issues of strife in certain parts of the world. And then, of course, we have a new U.S. president with a fondness for tariffs and the disruption of business as usual, particularly it comes with other nations. And I just wanted to cite to this end, there was a recent release from IATA, the International Aircraft Dealers Association. They put out their Q1 report, and there was a commentary. I'm not going to quote, but paraphrase from Lucino, their executive director of IATA, and he said, while the market prices remain stable, the first quarter results from their memberships, do indicate some concern. And their members, I might add, are many within the industry, but also some 60 leading dealers and brokers that facilitate the trade in business aircraft. And he cited that their 6-month projections represent a slightly less optimistic view of the market than they saw in what was a very optimistic and very robust Q4 of the last year. So I'm going to just review some quick slides, just kind of set up some context here, and then we're going to go to our panel. So this is just looking at Q1 activity in the world. Let me just close a couple of these items here. Looking at Q1 activity of total business jet transactions. And if we look to the far left, there's two red bars there. The squattier one being 2024, where there were some 464 transactions recorded. And then this year, we're up to 620. So we're having a very robust year. We're actually up in transactions by 166 units. That's about a 36.5% increase Y over Y from Q1 of last year to this year. Pricing has, on the whole, actually softened just a bit. We're off as an aggregate of all aircraft, small, medium, large, we're off about 6.1%, maybe about $420,000 on a per unit basis. But most of that, as you can see, is coming from the mid cabin section. That's mid and super mid. Light is relatively flat. They're actually off about 5%. Large jets are actually up considerably. I think that's about a 16% increase there. But if you see, most of the loss is coming in the mid cabin segment. And then if you look at the transactions, transactions have again been rather robust. We're up 47 units in the light. Again, this is Y over Y for Q1. We're up 47 units in the light category, 49 units in the mid cabin, and 32 units up in large. So focusing again on that mid cabin segment, remember that's the one that's actually off a bit. It's actually off about 19% in price. Let's go to the next slide, please. Okay, this is really just isolating that mid cabin segment, which I think is kind of interesting here. So again, remember they're off about 19% in price. Maybe not surprising then is the first few bars on the left there, which indicate average days on market. So they are performing at a slower pace to sell. It's taking about 85 more days, 2.5 more months to move a big cabin aircraft. But this is the one that I find kind of inverse to typical logic. Pricing is down again. Remember, 19%. But if you look at the aggregate of the units offered for sale in 2024 versus 2025, it's actually a 2-year newer aircraft, 2-year-old, 2 years. How should I put this? It's a 20-year-old aircraft versus a 22-year-old aircraft that was offered in 2024. So a new aircraft is actually generating in the mid-cabin segment about 20% less price. And let's bear in mind, too, that this mid-cabin is the smallest segment of the market. There's only about 6,000 aircraft that represent that market segment. If we're looking today, the fleet or the inventory of aircraft offered for sale in business jets is running right now around 1820 to 1840 units. Call that about 7% of the fleet for sale. And you see here that the mid cabin is a fairly small component of that overall. So this again, we're looking at this again in the context of uncertainty that we understand is prevailing in the market. Next slide, please. Okay. And this is from JETNET IQ, the program we do in partnership with my friend Vincent. He's out there surveying owners and operators on a quarter annual basis. I believe this was just presented last week in Geneva, and I believe this is the Q1 information. To date, we have not, I'm sorry, the Q2 information. We have not finished the Q2 summary yet, survey yet, but I believe at this point he had, some close to 300 respondents. But the takeaway from here is that looking at the information, this is the top 20 economies, if you will, in terms of installed fleet of business aircraft. And we see the United States, of course, always standing tall with about 60% of the fleet. That's just shy of 16,000 business jets and about 8,200 business turboprops out there. But notice that the forecasted GDP for the United States is actually flat, albeit slightly negative at about minus 0.1%. So that has to give us some pause here in an industry that is so centric upon North America. Next slide, please. Okay. And this is also from Vincent as well. This is the current market sentiment. And I think this is kind of a where the rubber meets the road kind of slide here. So, yeah, Rolly has talked to, again, this was a couple of weeks ago, but some 244 owners and operators had responded to the survey. And they had indicated here, if you look at the longest bar, which is 53.3% feel that the economy, the industry, the market itself has not yet reached the low point. So again, some pause here that more than half of the operators out there feel like perhaps the worst is yet to come as we're here in about the midpoint of Q2. Okay, and let's move to our first couple of questions, and I'm going to pick on my friend Rolly Vincent. So, Rolly, how are you today?
Very well, Paul, and thanks, Paul and JETNET team for organizing this webinar and this series of webinars. We look forward to really welcoming people to the world of data where we live. And one of the beauties about working with JETNET, WINGX data, JETNET IQ data, it's coming in constantly. This data is being refreshed all the time. So what we think we knew maybe a few months ago or even a quarter ago maybe has changed now. So thanks, Paul.
Right, and Rolly, I might add, is actually on vacation after we spent a week working hard in Geneva. He went on for some additional time with his family in Europe. So good for you. Rolly, a couple of quick questions and kind of reflecting back on the two slides we just looked at from JETNET IQ. So we see today uncertainty permeating in the pre-owned business aircraft market at all levels, the light, medium, and large cabin aircraft. For you, how does this translate to new aircraft deliveries? And has this compelled you to adjust your 2025 forecast for aircraft deliveries this year?
Great questions, Paul. Pre-owned markets and new aircraft markets move a little bit differently. Although we have to look at the pre-owned first because, frankly, we get an indicator pretty clearly. We see it in all of the JETNET and IQ data as well. Pre-owned tends to be at around 4x the volume of the new. So we look there first. It's kind of like a health indicator. So whatever Paul's just presented, I think is really relevant. One thing that we're seeing, and we see it in the JETNET IQ data, is just this sort of shift. We had a really strong Q1, and we saw that in some of the data already. What we're looking at on the screen here is Q2. This is an in-the-field survey. The survey began April 14 or 15, and the data that we collect here for this slide ran for about a month. Okay, so that went from April 15 to, let's say, May 15. Let's go to the next slide if we could, and it'll just give you a little bit more detail. I know one of the questions has come up, is this slide deck going to be available? The answer is yes. Please, we'll follow up with you on that, but the answer is yes. Here's the same data that we just looked at, but now we're looking at it over time. And this is the question that we asked the owner-operator community. It's a survey that's been going out for 14 years. We have almost 27,000 people have answered these questions, and that's what's buried here in these lines. Red is North America, blue is Europe, green is Latin America, Caribbean, and gray is the rest of the world. And we see what's been going on, and the sentiment now, this is the absolutely up-to-date data that we can share with you on where is the market sentiment right now. And we saw the Q4 and Q1 sentiment was up, and now we're watching this and it's dropped. That so-called Trump bump, or whatever you want to call it, that happened in Q4, we measured it. It went up 28 points, this bar. So the higher the bar, the more optimistic the market's feeling. We've lost all 28 points in Q2 so far. So the rise up and all the way back down to where we were. The US and Canada is that red line, and that's 65% of the market. So we don't like the shape of this thing right now. What it does is it gives us some pause. And I think, Paul, you said it right. Uncertainty is really, we think of that, but also we think of unpredictability. I know Kevin's going to talk to this as well. We just had a ruling come out even yesterday, I believe, that changes perspectives on trade, tariffs, etc. So what a dynamic market. And times like this, people tend to slow down a little bit. I think there's just one more slide. Paul, maybe if we can just proceed. Yeah. Here is a statement. It's a statement. And this is broken down. This is, again, the Q2 data. This is as fresh as it gets. So this data reflects the post-April 2nd announcement by the U.S. administration about world tariffs. The blue box, that's what we asked them. Here, do you agree or disagree with this statement? Uncertainty. There's that word Paul just used. Uncertainty about the impact of tariffs will delay my or our purchase plans for new aircraft within the next, call it, in this case, we said 12 months. Get a picture. What does it look like? We do not want to see blue on these charts. And if you look at it, North American respondents, a little bit less concerned about the tariffs, but obviously there's a lot of blue there. If you add those two numbers, 50% or so removing the uncertain folks. But look at the rest of the world, Latin America, Europe, and the rest of the world. All of these regions, the rest of everything outside the US and Canada, look at what's going on. A lot of blue, the dark blue, we're really concerned about. So what that's telling us, it's a signal that demand for new airplanes is likely to be lower in the next little while. We're calling it here for 12 months. That was the statement. We're seeing it in our net order estimator. We have a tracker on that. We also have a tracker on, are you going to cancel your order or delivery position? Both of those have moved pretty sharply up from where we were in Q1. So Q1, the story we heard, pretty good market. And in fact, our forecast, to Paul's question, we're keeping our forecast intact for this year. We're talking around 820 new business jet deliveries. What will happen this year, barring any unforeseen supply chain problems? So let's call that 8% increase year over year, 2024 to 2025, new jets coming out of the factory, delivering to customers. We're confident on that. We don't think it'll go higher. That's 8% up year over year. And we'll see what's going to go on here. So like I said, uncertainty has become unpredictability. And even just yesterday, a ruling throws another wrench or a spanner into the spokes, as I'd say. Paul, I think I'll pass it back to you on that.
Sure. Thank you very much, Rolly. It was great. I actually have one more question for you. And before we go on, I should tell the audience, too, if you do have questions, we're going to hope to have a few minutes of Q&A, and we'll try to get a few questions if you want to enter those in on the Teams meeting here. Second question for you, Rolly. And Sarma, could you back up to the top 20 installed fleets? And one more right there. Rolly, so referring to this slide, which is actually very compelling. So again, we've got some 16,000 business jets and 8,200 turboprops in the United States, and yet, a rather flat or negative, GDP forecast. So what are the ramifications for our industry when the largest market, dare I say, goes offline for any amount of time? Where else can OEMs turn, you think, for new buyers? And I'll suggest Brazil, perhaps. Is that where OEM should be looking now, where the U.S. can't meet demand?
Paul, it's a great question. Right now, of course, most of the production slots that are coming this year and next year are all sold. So to the extent that there's anything available for sale, where do you look for the sales? Middle East is a good place, although oil prices have been somewhat depressed. But you can see on this chart the Emirates and Turkey, of course, and other countries like that. They're still just embracing business aviation in a very big way, and it's very encouraging to see the international focus on BizAv coming. We just came from the E-base meetings as well. It actually was more optimistic than I expected. Europe has been growing its fleet at 3 times GDP the last 20 years. Nobody talks about stuff like this. The fleets here in the non-US markets are young. They tend to be larger, longer range. This is a great place to be selling your services and your products, that's for sure. So yeah, Brazil always underestimated. This is an amazing market, largest market south of the equator for this industry by far. Brazil, Mexico are the number 1 and 2 countries after the US for fleets. I mean, they don't get a lot of love, and yet they really should. This is where, this is where aircraft can be sold right now for sure.
Very good, Rolly. Thank you very much. Let's move on now to Kevin Michaels over at AeroDynamic. Kevin, as you indicated, just when you think you have this tariff thing figured out, something new arises. I think all of us in the industry are thinking now towards July 9th and the so-called Trump Tariff Liberation Day, at which point a decision is going to be made about whether or not 50% tariffs will be applied to the EU. So looking at OEMs and the kinds of constraints that they face, aerospace supply chains are strained now. And business aviation is certainly no exception. So the question is, what are the biggest supply chain bottlenecks, and why are those so for the OEMs?
Yeah, thank you very much, Paul. And good morning, good afternoon, everyone here. Where are the biggest bottlenecks? Well, we've got a couple things going on simultaneously. We have bottlenecks, which existed before Liberation Day. And then we have tariffs, which really exacerbate and develop new issues. On the bottleneck side, if you were to really isolate where the biggest bottlenecks are in aerospace today, I would highlight 3 particular areas. One is aero engines writ large. The aero engine supply chain has been strained for quite some time. There are bottlenecks within this, like forgings and castings, which are well known by now. And it just also so happens that the aftermarket is really, really active and hot right now for engines. At the same time that production rates are ramping up significantly. And by the way, most engine OEMs make their money in the aftermarket. They're not hugely incentivized to add capacity. In the air transport sector, there's a very public spat happening right now between Airbus and Safran, where Airbus wants to go to higher rates and Safran isn't as interested as Airbus because they can make more money if fewer engines are produced. Business aviation is slightly different dynamics, but nonetheless it's there. So one is engines. Number two is interiors. And this has become a bigger and bigger issue in the last, I'd say, 3 or 4 quarters for business aviation and for air transport. You have a lot of very unhappy and not terribly profitable tier ones in interiors today. You have a situation where there's a certification bottleneck. In EASA right now, we are down to 2 inspectors or 2 people that are responsible for STCs and TCs for interiors in general. And this is now spilling over into business aviation for OEMs like Dassault. And then the third bottleneck is it's hard to put a name on it, but it is small and medium-sized enterprises, less than $100 million in Europe, in North America, that are facing a working capital shortage right now because they do not have the capital to support a ramp up, and they have difficulty in getting human capital. And it's playing out differently in Europe and the US, but it's holding back rates, and it's really sort of a game of whack-a-mole. So these are the 3 big bottlenecks, Paul, that we see affecting the supply chain today.
Wow, that's very interesting. And yeah, we were hearing a great deal about the labor shortages and everyone striving for to recruit more talent in the industry. So that's very appropriate. Another question. So you mentioned engines. We were hearing a number of years ago about the shortages of titanium, and a great deal of
Yeah.
that being manufactured or produced in Russia. How important is titanium in the engine market?
So yeah, titanium is clearly in the news, and this goes to another change in our world, which is the Russia invasion of Ukraine. And prior to that invasion, Russian supplier VSMPO Avisma supplied 40 to 45% of the titanium used in the global aerospace industry. And there's different types of titanium, Paul. There's what's called rotating grade, which is used in engines, let's say in discs or other parts of the engine. And there's structural grade, which is used in aircraft aerostructures and landing gear and other components. So what's happened is that with the Russian invasion of Ukraine, there have been more or less not formal sanctions, but OEMs that have really pulled back from using that Russian titanium, primarily in North America. Boeing actually started to plan to stop using this titanium in 2014 after Russia annexed Crimea. However, the situation is very different in Europe. Airbus, Safran, Rolls-Royce are still heavily dependent on Russian titanium today. And in fact, they have lobbied against EU sanctions on it because it's just too hard to replace that much titanium capacity. On a positive note, there are 2 new titanium mills that have come online or are coming online in the US. One put up by TiMet, one put up by ATI. That should help alleviate the shortage. But the bottom line is this. If Vladimir Putin decides he wants to stop shipping titanium tomorrow, he can shut down parts of the supply chain. And that vulnerability remains today.
Wow. Very good. One more question before I let you go, Kevin. So back on supply chain and bottlenecks. So we talked about the bottlenecks themselves, labor and talent availability, and tariffs impacting. Well, let me ask you. So how does all this, including the tariffs, ultimately going to impact the cost of maintenance and maintenance in the supply chain?
So how could tariffs impact maintenance in the supply chain? Yeah.
Mm-hmm.
Yeah. And that let me answer that question, Paul, and maybe let me just talk a little bit to this chart in answering your question, because the tariffs have been, of course, on again and off again. The first version of tariffs before Liberation Day was focused on Canada and Mexico. And this 25%, which would have been absolutely devastating for business aviation in particular for business aviation. With Liberation Day, it was changed where it was only non-USMCA compliant goods coming from Mexico and Canada would receive the tariff. In general, about 40% of all the trade with Canada and Mexico is non-USMCA compliant. In aerospace, it's a lower number. RTX came out recently and said that 20% of their imports are non-USMCA compliant in all of this. Now, so we really alluded to this court, this obscure court, the International Trade Court, the Court of International Trade, which none of us had heard about until yesterday, had come out and said that the basis upon which Trump enacted these tariffs, which is an emergency situation where the executive branch usurps the power of the legislative branch, which is supposed to regulate tariffs according to the Constitution, they basically said he's overstepped his boundaries. What does that mean? It means that these country tariffs here that I'm showing on this map would go away, although there would be provisions for a temporary 3-month tariff of up to 15%. It does not affect the steel and aluminum tariffs that are imposed on the industry, but it does affect the country-specific tariffs. This could go all the way to the Supreme Court. Now, let me come back to your question. What all of this means and this uncertainty means and how it affects the aftermarket is this. Number one, we have relied on a fluent movement of parts and rotables to support the global fleet of business aircraft. A lot of that movement now has been frozen, and the people, distributors, people that hold banks of parts, they now don't quite know what to do. You can't count on having a cache of inventory in one location and serving the world if tariffs are going to be imposed. So in the long run, it means that we're going to see a less efficient aftermarket supply chain where you have more regional distribution rather than centralized centralized major distribution center. That's point one. Point two is that the bottlenecks and tariffs, we've just come through a period of extraordinary price inflation in business aviation. We've seen numbers like 8, 9, 10% of spare part prices going up and maintenance prices going up in recent years. What all this means is it's probably going to continue because for the OEMs to make up for the tariffs, they are going to raise prices in the aftermarket more. So I think this provides cover for extending the round of above average price inflation, unfortunately, in business aviation and supporting activities. And then there's a demand impact, which Rolly already talked about.
All right. Well, thank you very much.
Thank you.
Moving on to my friend Richard Coe in Geneva this morning. How are you today?
Yeah, good morning, Paul. Good morning, everyone. Doing very well, thank you.
Very good. Glad to see you again. We spent some time last week together. So, Richard, looking at your WINGX data, what recent trends are you seeing in flight activity by aircraft type or operator model? And what I'm really kind of getting at, are there signs that economic or policy pressures are starting to shift how and where aircraft are being flown?
Great. Yeah, well, we got a lot of numbers on this slide that you're sharing, so let me hold off from the slide itself and just give you some general comments.
Great.
We are not seeing yet very discernible signs of the impact of the tariff announcements, and that actually quite surprises me. I'd expected to see in April, much as Rowley's sentiment index indicates, some pullback in some parts of the market. But what we saw stepping back to Q4 last year is a Trump bump. Trump came into power, and there was a very discernible change in the pace of flight activity. In Q1, flight activity, as we'll see on a subsequent slide, was up just 3 or 4%. And since the tariff announcements, flight activity is still up a little over 3%. And actually, just to focus on a few parts of that, what this set of numbers, this table shows, is that we've done a little comparison of the 7 weeks since April the 5th compared to the 7 weeks prior to April the 5th. So that's what the post and pre means here. And what this shows is that pre, if we look at the first of all, post versus pre, the 7 weeks since the tariff announcements have seen globally 1.4% more activity than the 7 weeks prior. Okay, some of that is down to a seasonal effect. Generally, the second quarter is a little busier for the global business aviation market. But what we also did was we compared the year-on-year trends. So we looked at the 7 weeks before the tariffs, and we said, right, what was a year-on-year trend for that period? And you can see that's the number at the top of the second column, 3.4%. And we looked at the year-on-year trend for the 7 weeks since the tariffs, it's 3.3%. So it's very slightly less year-on-year growth in the 7 weeks since the tariffs. And indeed, you need to take into account that we had an unusually late Easter this year, which came after April the 5th. So actually, those numbers, that trend since the tariff announcement, looks pretty good. It's being slightly deflated due to the Easter holiday. So actually, it's showing that there's some resilience in business jet demand. Now there is some variance across the market, and that's the reason for this table having a few different rows, because what we wanted to do was look at how these trends compare in different parts of the world and across different operator types and across different cabins. So without getting into too much detail, let me focus on the ones that I've color coded on the right, Paul, because looking geographically, it is clear that we're seeing in some quite important markets like Germany an increased deterioration, a further slowdown. We're already seeing a slowdown which has really extended over the last couple of years, really way back to the Ukraine invasion. We've seen a slowdown in demand in Germany. A number of factors concerned there. Germany was hit by the change in trading conditions. Germany clearly had some major issues in energy transition. Its export model has been hobbled over the last few years. We've had a lot of pressure from net zero, which has discouraged certainly corporate flying. But what we've seen since the tariff announcement is a further deterioration. So I'll just pick out one number. In the 7 weeks since the tariffs, BizJet activity in Germany is down by 8% year on year. And indeed, business jet activity in Germany in 2025 compared to 2019 is lower. So actually, for Europe as a whole, business jet activity this year compared to way back in 2019 is just 2 or 3 points higher. Way less growth than the US, for example, has enjoyed. So that's a problem for the whole of Europe, but particularly for Germany. So there we have seen clear deterioration since tariff day. Another geographical area where we've seen more decline since tariffs is flights from Canada to the US. So the trend in the post-tariff period is -4%. That's year on year, 4% fewer flights year on year. And actually, I've seen some interesting study on plans, particularly plans for leisure flights later this year, and it does appear that a lot less Canadians are gonna come to the US for probably all kinds of reasons, but they are associated with the tariffs. Just pick a couple of others, Paul. Corporate flight activity. So we track the flight departments which are linked to corporations, and we've seen a steady decline in demand from those corporate flight departments over the last 2 or 3 years. Apologies for the background noise. Let me know if that disturbs the dialogue. But anyway, Paul, we have seen that trend continue since the tariff announcement, and I would expect looking forward that corporate travel will be more generally or across the board, not just for BizJets, will be cut back over the next few months as corporations deal with all the uncertainty. Just coming down the list to the last couple, Part 135 aircraft. So this is aircraft certified for Part 135 flying. We've seen that move into a declining trend since the tariff announcement. Again, doesn't surprise us so much. There's some softness there. Ad hoc charter markets would be where BizJet users could pull back quite quickly and potentially just revert to using the airlines, certainly for a period. And then finally, 91K right at the bottom there. So that's the fractional operations globally. We've seen in the 7 weeks since the tariffs 9.6% year-on-year growth in traffic. So that's very similar to what we saw before the tariff announcement as well. So that part of the market continues to be very robust. Apologies, lots of numbers on this table, but
No,
that gives good interest.
It's wonderful stuff, and we all live for data, particularly in this industry. Thank you very much. Again, I want to encourage the audience, if you have any additional questions, to just send those over, and we'll try to get to them towards the end. Actually, Rich, I had one more question, although I think you were kind of alluding to it. But from your perspective, and I'll ask you to put on your predictor's hat here. How might, oops, I'm getting some background noise. How might tariffs be influencing future business jet demand? Not necessarily, I'm not talking about the impact on transactions, but in a broader behavioral sense, operational shifts in flight patterns. So, you've already alluded to, less Canadians, going to the United States and challenges in Germany. Where else do you see this? And you might think of this in terms of what happens come July 9th, if in fact the European tariffs are held up by our president.
Yeah, I think that Europe has been a slow market so far this year, and I think that with the uncertainty caused by the tariff announcements, there will be prolonged slowdown. We've seen some slowdown in Asia as well in the last quarter. So again, that could take time to reset. I mean, where these tariff announcements will land, no one knows at this time. But looking longer term, it does appear that there's going to be some geopolitical reset, some new kind of bilateral trading patterns, and we could see BizJet activity aligning with those. So the recent deal with Trump in the Middle East could continue to spur flight activity out of the Middle East, particularly in Saudi Arabia. The US has a very strong domestic market. Only 7% of flights are international. So as long as the US economy stays on course, or at least doesn't fall into recession, I would expect perhaps not as much growth as we've seen in the last kind of 3 or 4 months, but positive impetus this year.
All right. And thanks very much. We have one question. I'm going to read this because I don't really know the answer, but it says, are you planning to send this data into the BIS notice of request for public data on the 232 investigations for commercial aircraft and jet engines and parts? I do not know what the BIS notice of request is for public data. I'm not sure if anyone in the panel does. I don't believe it is JETNET's intention to send this data over, but perhaps I can be educated by someone and told why we should. Is anyone familiar with that? Okay, I'm not getting.
Yeah.
It's-
The Department of Commerce has a Section 232 request right now for submission. So I think it's the Department of Commerce. I'm not sure if BIS is involved, but certainly the DOC in the United States is involved. Yes.
Yeah.
Okay, well, maybe this is, good data that we should send them. Thank you for that question. I have a few additional questions. We do have some extra time. Again, I'll encourage anybody in the audience, if they want to type in a question and send it over. I actually had one for you, Rolly, that I'm going to run by here. Yeah, so we've seen a healthy increase in pre-owned aircraft transactions, going to about 620 deals in Q1 of 25, up from 454. So despite growing tariff uncertainty, do you see this as a sign that the market is actually quite resilient? Or is this a reflection, do you think, of people kind of getting out ahead of the curve, particularly with large aircraft, that maybe they're going to buy now, before the impending doom of tariffs perhaps lays waste on the price of an aircraft? Any thoughts about that?
Yeah, thank you, Paul. Great question. The answer is yes, and the answer is also absolutely not. So I'll start with yes. Some people who know what's the game is that's going on have moved to accelerate their purchasing and get an airplane delivered to them, let's say in the pre-owned market. Also, with the anticipation that we're going to see accelerated depreciation, bonus depreciation in the U.S. brought back in the tax laws. So that's a very positive thing we're watching for, hoping for, looking for. That'll help new and pre-owned, of course. So that's part of it. So yeah, they want to get in while they can, while there may be product out there and available. So I'd say that's good. The other thing that's going on is the air traffic control delays. We're starting to hear more and more. The U.S. In particular, the system is crumbling a little bit around the edges, and we've been told so for so many years we have the safest, the best, the whatever. Well, what's going on? We've got a lot of labor issues, a lot of shortage, and it's not labor issues, it's a shortfall of talent and experienced talent throughout, as Kevin said, the supply chain generally, but our air traffic control staffing as well. So a lot of things going on, but I think people are looking at this year in an opportunistic way, as we should always. What's good in this spaceship, and I think we're seeing some pretty strong interest in our airplanes, what's out there, and yeah, let's take that bonus if we can get it.
Okay, great. And another question, and I think this is probably appropriate for both you and Kevin. So tariffs and geopolitical tensions, do we believe they're starting to shape OEM delivery strategies and pricing? Are we starting to see a regional fragmentation in aircraft market where buyers and sellers are increasingly choosing to transact within a particular domestic or tariff-friendly region? Any indications of that happening, or do you think it will happen?
Maybe I could start on that, Rolly,
Sure.
and turn over. So what I am hearing is for OEMs that have final assembly lines in different locations, they are thinking in terms of the volume that comes out of each. So it's almost local for local, if you will. If generically you have a final assembly line, let's say one in the US and one in Europe, you might move the volume amongst those, to compensate for that. And so that is definitely happening. It is interesting too that if we talk supply chain strategy, I'm going to single one of the OEMs out, but Bombardier a number of years ago decided to really rein in its supply chain to be more regional, and they started moving away from low-cost sourcing in Asia and tried to make it, rein it in. And Bombardier has been pretty solid, on meeting its numbers and a lot of 7,500 sales and everything else. It's really buoyed the company. And I think in general, even if these tariffs pass, if they pass, the shock effect of this is such that we're going to see much more regional supply chains. And the question I would pose, and maybe Rolly can comment on this, you're seeing games as to who buys aircraft. So if the tariffs stick, and let's say I have a Dassault aircraft on order, do I set up a little shell company in Grand Cayman or someplace that takes delivery of the aircraft so that I avoid the tariff? I mean, those are the things that happen. And we're seeing that now in air transport, where Delta Airlines has said that the Airbus aircraft that they're set to take delivery of, they're just going to operate some of those in Asia so that they never set foot in U.S. soil and can avoid the tariffs.
Interesting. Any other comments on that, Rolly, or?
Yeah, absolutely. Kevin, thank you. That's great color. And in the commercial market, you can do things like that. Delta taking delivery of Airbuses in Japan or so. It's really interesting what's going on. And that's what will happen. People will get creative as we need to, whether it's, I call it lawyering up if we need to do that. That's what our industry is getting really good at right now. We've got some amazing lawyers out there, some on this call, I'm sure. I mean, they're hyper busy, right? So can we take delivery of an aircraft outside our normal jurisdiction and base? You'd have to talk to your lawyer about that, but I think the answer is probably. And then how to use it. If you want that accelerated depreciation, it gets complicated in a real hurry. So we're not on this call to provide legal advice. Please reach out to your aviation attorney, and there's a lot of great ones out there. So I think we get creative as an industry. One thing that we need to do as well is advocate on the Hill. I mean, I know I was talking to Jim Viola of Gamma just the other day, and he was talking about being on the Hill and having all these meetings with legislators, and there's a lot of education that has to go on, and it almost feels like day one sometimes. And as an industry, we need to get louder about who we are, what we do, and how important we are to our economies and our, jobs, etc. Because right now we're kind of invisible. I think the example that Kevin gave, Airbus, etc. I mean, Airbus and Boeing get a lot of the headlines. We have as many airplanes in our industry, jets out there, as we have Airbuses and Boeing. So we're big. We're just maybe a little bit too quiet.
We are in.
And I know we were talking to Kevin earlier, and he made the point, between BizAv and commercial, there's a lot of shared suppliers among those. So we need to consider that, that we're all going to the same suppliers. We do have a couple of questions coming in now, which is great. And one of them is, will we be sharing the slides? And yes, we can make these slides available after the webinar. Good afternoon from London. Is there a breakdown as to how people are purchasing aircraft today, cash versus finance? Any thoughts from anybody on the group? Are we seeing any change in behavior?
Well,
and I'm thinking maybe, again, the notion of I need to buy my airplane now. I'll pay cash for it now to buy it quick because I'm concerned that there's going to be a tariff implication later on.
Typically, when we see this and we talk to the bankers and lenders and lessors, it's around 1/3 cash at delivery. What we see, though, in our IQ data is that a lot of those aircraft, after they're paid for, if you like, upfront cash, people do finance afterwards. So it settles down to about 1/3 cash, and frankly, the rest, ultimately, some sort of financing is often applied.
Right. Another question here, Kevin, you might have some insight on this one. What is the position with OEMs such as Embraer and Dassault, which perform a substantial amount of completion work in the U.S.? Are these aircraft considered U.S. origin goods for purposes of tariffs?
Oh dear, I think you're venturing into an area outside of my expertise and into the realm of the lawyers that really just advocated for on this. So I don't know the answer on that.
Okay, well, fair enough. Richard, I did have another question for you. We're now 5 years since the pandemic, and in that time we did see a change in I don't know if I'm going to call it behavior, but demographics of aircraft ownership. And that is, I think we saw a lot more private individuals, come into aircraft ownership as opposed to, publicly held companies. So in light of that, and really everybody, I think, can probably reply to this. Do you believe that, private flight activity reflects a longer term structural change in the market? Or do we think this is just a short-term effect of the post-pandemic period? And that is to say, that a lot of these first-time aircraft buyers, coming out of the pandemic, will ultimately go back to their first-class business seats on the commercial airlines. Any thoughts about that?
Yeah, let me tell you, Paul, what we're tracking here. I mean, on the left, what we're
Please.
tracking is North America, and on the right, Europe, and we're comparing the recovery versus 2019 in number of sectors flown by scheduled airlines and business jets. And what this clearly shows is in both charts that biz jets have come back from the COVID pandemic much stronger than the airlines. In the US, or in North America generally, we've seen airline sectors finally kind of supersede where they were in 2019, whereas in Europe, we still see them lagging by quite a bit. And, underlying that, there are obviously all kinds of insights we're pulling on airlines. We can see how depleted the unique connections are. So the number of sectors have come back, but the unique connections connecting cities and metro areas in Europe and the US is way down from where it was in 2019. The premium cabin is also well down, as a matter of fact. So what we've seen is also a big increase in the I suppose in the inconvenience, in delays and cancellations on the scheduled airlines. And in correlation to that, we've seen this strong performance on the BizJet side, particularly in North America. So that 27%, Paul, that shows 27% more sectors flown by BizJet than in 2019. So that's a sustained growth, right? So that's a really strong pickup compared to pre-COVID, which isn't as apparent in Europe. But I would still make the argument that one of the tailwinds for this sector, for our sector, is the inconvenience and erosion in alternative airline travel.
Yeah. If I could add to that too, on the Europe side, a couple things. We do a lot of work in air transport, so I just happen to be familiar with a little bit of this. Germany, for whatever reason, is down 20-some% compared to pre-COVID with airline travel. Like, Germany has just been in an aviation recession. Very curious. The other thing is that with the Russia conflict, Russian airspace has been shut down to European airlines. And they have not, if you're traveling to Asia, they have to go around Russia. And it takes extra hours, whereas Chinese airlines can travel over Russia. So you've seen European airlines lose a lot of competitiveness on long-haul routes to Asia as a result of that. And that's baked into the numbers as well.
Interesting. Rolly, what are your thoughts about us as an industry? Do you think we've been good, about keeping our new first-time buyers sticky?
I think so, Paul. We haven't talked much about wealth transfer, but we know that that's going on right now. A lot of young, you talk to some of the OEMs and the broker dealers, the clientele seems to be getting a little younger, or maybe a lot younger in some cases, and it's new wealth, newly created or newly inherited in some cases. Once you try business aviation, it's hard to forget it. It's so good. And, as we talk about how the airlines have or maybe have not really recovered fully, we all have stories. Everyone's got a story about an airline situation and a bag that went one way and they went the other way and didn't see each other for 5 months. I mean, these things happen, and it's sad. It's true. I do, though, think that people, just because they've tried BizAv doesn't mean they're going to lose the first class privileges on Delta or whoever they're going to fly. What we find is that people don't fit into a box. That they're not just a charter customer or a fractional. They're everything, right? They a full-time corporate flight department might have a fractional share, and they certainly will charter on occasion, and they certainly will fly a helicopter, and they certainly will fly in the front of a Airbus or Boeing. So it's not a pure market, and that gives us lots of opportunities every day to attract these people who have alternatives.
Yeah, very good. And, I kind of echo that sentiment. I mean, thinking back, I've been in this since JETNET was launched in 1988, and I do recall, the big dot-com boom and bust, and then the Great Recession. A lot of first-time buyers came in, and a lot of them did not stick, after the Great Recession. It's my feeling, having talked to a lot of brokers, particularly those that are members of IATA, that there was a lesson learned to be more thoughtful about how first-time buyers were brought into the industry, to have honest conversations about what kind of aircraft you truly need. Let's not buy more aircraft than is necessary, and understand what the true cost implications are of operating an aircraft. So I think the industry did perform admirably in that sense. So kind of a final question for the group. Again, July 9th, Trump Liberation Day. Any forecast? What do we feel about that? I mean, I tend to think that he's kind of cagey, and that those tariffs are not ultimately going to stick. But I could be wrong, because he is very cagey, and he often proves me wrong about what I think he's going to do. I mean, if they do stick, Rolly, I mean, what is that going to do to your forecast?
Well, first of all, I don't think they're going to stick. Secondly, I think this is mostly about U.S. and China. Believe it or not, we don't talk much about that. But U.S.-China trade doesn't have a big impact on us as on the aerospace side. And frankly, even the fleet in China has now shrunk below, I think, 300 units. It's been declining since 2016. So, I mean, whereas China was the star market 10 years ago, it hasn't been for a while. And I think if this truly is a China-U.S. trade war, and I think that's really what it is, that can carry on, not happily, but for any of us, but I don't think it impacts us as much. I think the administration is learning as they go. They come out with these pronouncements, and then they realize that, oh, by the way, something called the Agreement on Trade in Civil Aircraft, signed in 1979, works very well. We have a free trade agreement for the world, and it's been working really, really well. We should be the poster child of how to do things, how to be a great manufacturing powerhouse, and to be an export-oriented business if we're in the U.S. it's worked really well. It's a great industry. Learn from us.
It is a great industry. I think we're all bullish on it, but we try to be realistic. Richard, your thoughts?
Yeah, I mean, I think three simplistic scenarios. Either we go into a full trade war, and that was what was anticipated at the start of April, and that would push the US into recession. And from all our previous correlations on BizJet activity, that would most definitely take us downhill. Or there are various resets which retain the tariff barrier, somewhere around 10% plus, which would be certainly more than we've had in the last 50, 80 years. Increase the cost of business will definitely be a headwind, but I think the industry has got enough momentum to overcome that. Or we get by with perhaps some isolated trade tantrums, but otherwise as before, which I think is somewhat unlikely. But then perhaps we revert to the much sunnier outlook we had at the start of this year for this industry.
Very good. Kevin Michaels, last word.
Okay. What we're living in here, it's not just, we talk tariffs, but it's really, it's political economy, because foreign policy, of course, has shifted dramatically as well, not only with Russia, Ukraine, but with what's going on in Europe. As far as what happens with the tariffs, I have no idea. It could be a tweet tomorrow and we'll see. But I do agree with Rolly that a lot of this is fundamentally about China. And just last night, we didn't talk about this today, the U.S. sent up a trial balloon where it is now contemplating limiting technology exports to China to support aero engines. So China has put some limits on rare earths. The U.S. can play that game. And here's the dirty little secret. The U.S. has a kill switch, which can kill the China C919 program in its tracks. And China cannot get by and grow its economy solely depending on Airbus. So China needs the U.S. right now for its air transportation system. And I think you're going to see give and take with China, and with this new card being put on the table now, which is, by the way, China, we can shut down your C919 program and limit our exports to you. So I think we should look for more of that. And a final point I would make is keep an eye on the European supply chain, because what's also happening now is Europe is spending copious amounts of money on defense. So European supply chain is reawakening after being dormant, the military supply chain, for decades. That is hitting now at the same time that Airbus wants to go to 75 A320s a month. Where does that leave Dassault and others in the pecking order in terms of getting access to what they need to build aircraft? So keep an eye on the European supply chain.
Okay, very good. And I'm going to one last question, which I think is very relevant from someone in the audience. What is the exact status of bonus depreciation? Does anybody have any insight on that? I mean, is there any reason to believe that the Trump administration would not get behind that?
The bill is in Congress right now. It's passed the House and it's sitting in the Senate. So it's part of the bill. So I would expect that will be passed with the Senate's version.
Okay. Well, listen, we're about at the time to close this. We're going to give everyone back their afternoon or their day. I want to thank all my panelists, Rolly, Richard, Kevin. This has been wonderful. By the way, don't forget, everyone, Kevin has a book coming out, Time Machines, A History of Business Aviation. I believe that's going to be coming out later this year, so look for that. If you have found this webinar helpful, and I hope you have, then there's an opportunity to do a lot more of this, actually, and it's coming up this September. We will be holding Rolly, is it our 14th JETNET IQ Summit? 14th, yes. He's
number 14, yeah.
Yes,
yeah.
Hard to believe. Yes, our 14th JETNET IQ Business Aviation Summit is going to be September 9th and 10th. We're actually moving out of New York City for the first time. We're going to be at the Park Hyatt, Washington, D.C. So I would encourage you to attend, hear this kind of dialogue and a great deal more on other relevant topics and many thought leaders throughout the industry. Rolly has put together a wonderful agenda. He's got some great speakers lined up, OEM heads, advocacy heads, and many more great people are going to be there. And I might add as well that if you do think you're going to attend, and I hope you will, that there is an early bird registration opportunity right now, which I believe ends May 31. You could still register thereafter, but the early bird reduced rate is available now. So I would encourage you to register soon. So again, I want to thank my panelists. I want to thank my great associates, Sarmad Faraz and Justine Tresbeck in marketing and communications, who really were the executive producers of this event, and all my many colleagues, and there's too many of them to count, but so many who help contribute to the research and putting the data together for the slides. And I would also be remiss not to thank JETNET's ownership for supporting this endeavor. I thank you again, and I hope to see you soon, particularly in September in Washington. Have a good day.